Every trader steps into the market carrying a dream. The dream of catching the perfect move, doubling their account, or finally proving that all the sleepless nights were worth it. But somewhere between clicking buy and watching that first red candle appear, something subtle and dangerous begins to take hold. Expectation. It feels harmless at first. You set your entry, define your stop-loss, mark your target, and wait. But as the trade moves, so do your emotions. You start hoping. You hope it goes up faster. You hope it doesn't hit your stop. You hope the market just turns one more time. And that small spark of hope begins to override everything you thought you knew about discipline. Hope makes traders freeze when they should cut losses. It makes them greedy when they should take profit. It blinds them to reality and ties them to losing trades. It's never the red candle that destroys traders. It's the belief that the next one must be green. To understand this, you have to see what hope really is in trading. Hope isn't optimism. It's emotional resistance to reality. It's your mind refusing to accept what the chart is clearly showing you. The losing trade becomes a potential comeback. The reversal becomes a temporary pullback, and the rules you swore to follow suddenly feel optional just this once, and that's how traders lose. Not because the market fooled them, but because they refuse to face the truth. Imagine this. You enter a setup that aligns perfectly, your analysis, timing, and confirmation. All match, but then the market shifts against you. You tell yourself, it's just a retracement, it dips further. You hold on, you justify, it's still in structure, it'll bounce. But as the candles keep falling, your reasoning collapses into pure emotion. It has to turn. It just has to. But the market doesn't owe you anything. It never cared about your prediction, your entry, or your feelings. The market rewards probability, not hope. Hope is a survival instinct. It keeps humans fighting when all seems lost, but in trading, that same instinct becomes your downfall. Because the market doesn't respond to emotion, it responds to logic, numbers, and behavior patterns. Hope might save a soldier in battle, but it destroys a trader holding a losing position. Professional traders understand this difference. They've trained themselves to replace hope with acceptance when a trade hits stop loss. They don't pray, they exit. When the setup invalidates, they don't argue, they adapt. It's not emotionless trading, it's mature trading. Maturity is realizing that your job isn't to predict the market, it's to respond to it. You can't control what happens next. You can only control what you do next. Expectation is the silent killer before you even enter the trade. You've already imagined the win the screenshot. The satisfaction, that mental picture, becomes a prison when the trade moves against you. It doesn't just threaten your capital, it threatens your expectation. And when that breaks, your discipline collapses too. That's why so many traders lose. Even with great systems, they trade for outcomes, not execution. They measure success by results, not by consistency. The irony is that the moment you stop expecting anything from a trade, you begin to trade well. Your focus shifts from wanting the market to do something to seeing what it's actually doing. Take Daniel, for example. He had a solid strategy, clean setups, proper risk management, 2-to-1 reward ratio, but every losing streak sent him spiraling. He kept tweaking indicators, searching for the perfect system. He wasn't reacting to logic. He was reacting to hope, the hope that if he just changed something, he could avoid pain. But every system loses. Sometimes professionals know that they don't expect perfection. They expect probability. Losses aren't punishment, they're feedback. They tell you whether you followed your process, not whether you won a losing trade that obeys your rules is still a success. A winning trade that broke them is still a mistake. This mindset destroys the power of hope, because when you stop measuring success by results, you stop needing the market to move your way. You start focusing on execution, not emotion. And that's where calmness begins. Hope sneaks in early. It disguises itself as confidence or faith. It whispers, "This one must work." That's the first sign that logic has been replaced by attachment. Hope numbs the pain of being wrong until it's too late. It turns clarity into confusion and reason into justification. The moment you place a trade, your brain releases dopamine, that chemical of anticipation, the same one behind gambling and social media excitement. As the market moves, dopamine spikes when you win and cortisol floods your system. When you lose your emotions, begin to control your actions instead of your plan. You hold on longer. You move. Stops you pray, you're no longer trading. You're gambling emotionally. Most traders fail. Not from lack of skill, but from lack of emotional awareness. Hope doesn't just appear in losses. It appears in winning trades too. You start hoping the market keeps running. You stop trailing your stop. You ignore exhaustion, and when the price reverses, you panic. The same emotion that makes you hold losers too long makes you hold winners too long as well. True patience isn't built on hope. It's built on trust in your system. So how do professionals kill hope? They do it through brutal honesty. They manage expectations before they enter. They tell themselves this setup has an edge. If it wins, good. If it loses, next. They're emotionally detached, not careless but composed. Because consistency doesn't come from avoiding losses. It comes from accepting them without resistance. When you stop needing to be right, you start trading from clarity. Logic is the opposite of hope. Logic acts on data, not emotion. It reads price action, structure, and probability. When hope takes over, you replace logic with stories. You tell yourself, it's just a retracement. It's market makers collecting liquidity. It'll bounce. Those aren't facts. Those are comforting lies. Hope is short-term relief that creates long-term pain, cutting a loss. Hurts for a moment. Holding on to it. Hurts for weeks. To fix this, you must expect uncertainty. Walk into every trade detached from outcome. Whether it wins or loses, you're okay because your focus is on process, not prediction. When you expect uncertainty, you stop being shocked by losses. You start seeing them as part of the equation, not as failures. The less you hope, the more you see the market. Clearly, hope is fog. Logic is clarity. Amateurs trade to feel right. Professionals trade to be consistent. One trades for emotion, the other for probability. Every trader eventually reaches the point of realization. You can't control the market. You can't control reversals, volume, or news, but still, traders try. They watch longer, move stops, lower, double down. They're chasing a false sense of control. The human brain craves certainty. The market thrives on uncertainty. That conflict creates emotional chaos, fear, anxiety, revenge trading. Letting go doesn't mean giving up. It means focusing on what you can control. Your entry, your exit, your risk, and your discipline. Everything else belongs to the market. Think of it like sailing. You can't control the wind, but you can adjust the sails, fight the wind, and you stall, work with it, and you move forward. Why do traders struggle to let go? It's not just greed or fear. It's ego being wrong. Feels like failure, so the brain defends itself with denial. You tell yourself it's just manipulation. It'll bounce soon, but those are defense mechanisms, not trading decisions. The best traders in history weren't immune to this. They just learned to face it faster. Jesse Livermore once said, "The market is never wrong, but opinions often are. When you stop trying to prove your prediction and start listening to what the market is saying, that's when you begin to grow. You can't control outcomes, but you can influence probabilities. When you follow your edge with discipline, probabilities start working in your favor. If you break discipline, once you reset the cycle, You teach your brain that emotion rules the system. You have to retrain it to feel safe, losing. You must accept that being wrong is part of being professional. Confidence doesn't come from winning. Confidence comes from execution. When you can stick to your plan through chaos, through losing streaks, through fear. That's real mastery. Trading isn't about controlling the market. It's about controlling yourself. The market doesn't reward those who hope the hardest. It rewards those who adapt the fastest. When you let go of hope, when you stop expecting certainty, you begin to trade from peace, not pressure, because the moment you accept uncertainty, you find the only real certainty. There is your own discipline, your own clarity, your own control.